What's happening, guys? We've got another Sunday scan coming at you for July 19th and the week ahead. We've got a lot to talk about, and I'm up against a little bit of a clock because Aiden is sleeping upstairs, and I have no idea how long that's going to last. So I'm going to try to cram it all in before he wakes up because I am just here with him and nobody else. So we'll see how long that lasts. I might have to put this into two parts, but we'll see what happens. First and foremost, crazy weeks, crazy opportunities. You know, I talked about the good, I talked about the bad. You guys know that I got chopped up on AMC, and I talked about how I would come back from that, right? Next mentality, and you always want to be firing on all cylinders. And the most important part is as far as growing and exponentially becoming a great trader is to not have huge drawdowns. That's what it's all about. Finding the trades is not the hard part. Sometimes holding and being patient with trades, yeah, that can get difficult because what happens is a lot of times you're actually over patient too, right? And you end up overstaying. PLBY, Playboy, was probably one of my biggest trades ever, but I only sold a little bit of it prior to the earnings report, and then I ended up ditching it for about $10 per share instead of 30 or 40 or whatever it was. I think it was about $40 per share I was up on it. But you win some and you overstay on some, and then some, obviously you lose some, right? MOXC, same thing, nice double. Ended up pulling back some, and then it came all the way back up to the highs. Will it continue? We'll see. But the point here is that you really need to focus on keeping the drawdowns in check. Finding those winners, finding those trades, finding those opportunities. There's no shortage of them in this market, but it's what you do with your losers that's going to set you apart from the rest. It's going to set you apart from becoming that exponential growth that you probably want. So make sure you always dial it in. Make sure if you're wrong, be wrong. And most importantly, last week, typically I try to make these conversations as timely as possible. We talked about trading trash, right? And there was a lot of trash that was being pushed last week. There was a lot of trash that was up for no reason. And it was easy. You just chase one to the next, to the next, to the next, until hits a wall. And then all of a sudden you're left with a decision. Do you take it off? Do you wait? Do you, see what it does? What do you do? And, as you saw, things unwind fast and go right back to where they came from when there's no reason for them to be up. So always be aware, why things are up. If you don't know, make sure you have the proper risk management in place. You saw a lot of just complete, breakout type trades go right back to where they started from. And most importantly, some of these low floaters, right? We talked about low floaters getting kind of soaked up, these micro floats. And as soon as they stopped going up, they're actually lower than where they started at this point. So again, if you're trading trash, remember it's trash. Don't overstay because you will blow up your account waiting for the next big trade. And I think that's a very, very key takeaway because we all sit here, we all see one go nuts, and we all get on the right side of the next one and we say, hey, you know what? I'm going to be patient. I'm not going to sell this one too soon because I sold that one too soon and I could have been rich. Yeah, well, guess what? This one, everybody's doing the same thing. And then when it turns, you're out of luck. And you get that 20, 30, 50% pullback. So, it is what it is. And you have to recognize that. And I think we talked about it at a perfect time last week because you needed to know that for last week because there was a lot of 30 to 40 to 50% pullbacks each and every single day. Everything that went up that was trash had a 30 to 40% haircut immediately the next day. So hopefully it was timely for you guys. Hopefully you guys were able to take advantage of that. First and foremost, as I promised, Kyle M. You've got Scans, SCANZ. That is one of the scanners that I use. I'm actually glad to go home because for whatever reason it wasn't working on my beach setup, and I got to figure that out. But it's on all my other setups, and I was kind of lacking that scanner, which I do love to use each and every single day because it allows me to find a lot of these ones that are just kind of hugging high days or low days, and they make for perfect trend join type trades. So that's really the main scanner that I use out of that. But there's so many different things you can do with it. I also like the news as well. So that is for Kyle M. And again, all you guys got to do is leave a like and a key takeaway. Write the timestamp of your key takeaway. It helps us help you. We make the little videos, and then that's it. You just get a bunch of free stuff. One thing that I'm testing out, trying out, is this little posture thing, and I tweeted about it. And you put it on your back. I got the necklace version because I'm not going to stick something to my back every single day. But I've started to have a little bit of pain in my shoulder. And when I was super active, and I'm starting next week, but when I was super active at the gym and doing a lot of back, everything, I was pulling everything back, and I was okay. But since COVID and since kind of traveling around doing different training setups, I've started to get more pain in my shoulder. So this thing will make sure that that you're slouching. And so far, I'm on like 3 or 4 days of trading with it, but I'll provide some feedback. My back definitely was it was tight because it was or not tight, but more sore. Just muscles that I've never used or haven't used in years. So it's so far I like it. I reached out to them. I asked them if I could give some away on this video, but they told me they didn't understand what I was asking for yet. So we'll see where that goes. Traders for a Cause, we are live. Early bird tickets are for sale. They're 25% off. If you use IU Early Bird, I will send you guys a shirt as well. The promo code, the discount code goes on the last piece. So if you just go and add everything to your cart to come to Vegas, at the last piece it says, do you have a promo or discount code or something like that? Because I know that was a popular question, like where do I put it in? So we already sold half of the early bird tickets, and it's the fastest we've ever sold them. So I know it's going to be a full house this year. Once we sell out, we sell out. We've got just about half the tickets for sale for early bird. Once they're gone, we're going to pull that, and then it's just the regular pricing. So I do hope to meet a lot of you guys out there. Some of the best traders that I know, literally, started out by, hey, do you think Traders for a Cause is for me? Do you think that it's going to be worth it? Because I'm just starting. I have a small account. But don't underestimate the relationships that you make in person. Those become your friends over time. Those become your kind of go-to type of back and forth conversations, your pick-me-ups, your high fives, your growing together, all of that kind of stuff. And it's so important in this, in this trade and in this career that you have the support system and the people that are going to be better at you in certain regards, and meeting them in person and having those conversations and developing that relationship was crucial for me. Some of my best friends that I trade with every single day, that I surround myself with every single day. You create a different style or a different level of a relationship when you meet them in person. So one of the popular questions that I got is, if I am just starting out, is this too advanced for me? And the answer is no. It's such a good event. Traders from all levels, and we're going to have some amazing speakers. Always a huge event, always amazing people. But I've got some ideas this year. The board has some amazing ideas this year, and we'll probably start releasing some of the speakers as soon as possible. That's our next update to you guys. So I will include that link, but I do hope to see you guys out there. It looks like there's a lot of pent-up demand to get off the desk and come out to Vegas, so I'm excited for it, and it should be a great time. Let's see. One other comment was blinded by Plan A, or one other talking point that I wrote. So what I noticed is I got a lot of PMs, right? So you got one idea. You got an idea for a particular name. And, oh, yeah, you like it for a big picture idea. I like it for, this or that. Then it takes off, and it sits back, and it stays heavy. It's okay to change your idea. If something plays out, you have to adapt. You can't just say, this was my plan, I'm sticking to it, and then that's that, and, not change anything, right? If it doesn't work out how you expected, or if it already rips and it's already pulling back, or if it changes what it's doing, it changes its course, that's where your risk management comes in. So stop forcing the trade that you want to happen, right? A lot of times I see people trying to force a trade, trying to push a idea that they feel like should be, correct, and they're not taking into consideration that it was wrong, or that it might have played out, or that maybe the market has shifted, right? So I used the example last week. A lot of these crappy IPOs, these recent IPOs, were all getting pushed. As soon as that thesis or that sector or that theme plays out, you can't just hold these things, because they're going to go right back to where they came from. So I think it's very important to have a plan, but also know when to be wrong, when things have changed, when the sector or the theme or the idea has shifted or played out. And think about that when you're in trades, and stop forcing your original thought to be right, because it's not always going to be. And you can always take it off, rebuy, adjust size, whatever you need to do. The last talking point that I had before I get into the questions that were sent in was that you want to grow at the pace of your account. Stop forcing trades. Stop oversizing. Stop trying to look at the end number you want to be at. You'll be very, very surprised that if you are continually focused on bettering yourself in a particular position, and you can continually grow. It's not always about going 2x, 3x, 5x, right? You grow at the pace that you're going. And because you're doing that, you're also internally, the emotions that are involved with trading more size, the chop back and forth, the drawdowns, things like that, you're learning at the same time, right? You're learning how to deal with those. You're learning how it feels. And, if you go back and new traders freak out about $100 or $500, right? Worst day ever. And then you look back and you're like, yeah, man, was I new? And then same thing with $5,000 and $50,000. And then even with me, I put out a $200,000 loss like way long time ago. And it's just part of how you progress as a trader. And the way I felt way back then with a $200,000 loss, or with Kodak with a $1 million loss, right? It's just part of going through the process. And if you rush to that end goal, you don't ever learn the proper steps that you need for proper risk management, and understanding when you might need to be done with a particular trade, when it's played out, when the risk is too high. You're learning as you're going. So don't rush it getting to that end goal, because if you look back, after the end of the week, if you traded well, it adds up faster than you think. You should always be pushing yourself, right, to be better, make better decisions, better trades, better entries, better this, better that. But don't be always focused on where you want to be. Focus on how you're going to get there. And keep looking back each week and understand that it does work if you have a proper process. So that's not to demotivate. You should be focused on getting to where you want to be, of course. But if that's your sole focus, you're not going to get there. You need to focus on how you get there. Question sent in: do you find an edge when the short locate monitor runs out of shares? Also, do you see the higher prices locates more likely the stock to be an all-day fader? P.S. Love the videos. Thanks, Scotty. So yes and no. For me, if something is super, super easy to borrow, so I've got 4 or 5 different clearing firms. If 4 out of 5, 5 out of 5, maybe even 3 out of 5 are all easy to borrow, I'm going to assume that anybody and everybody can borrow it. Very easy to borrow, very cheap. Same thing goes with super, super cheap borrows, right? Now, if the volume's churning, and it should have died, that's when my antenna goes up. That's when I pay attention, and that's when I want to, just make sure that I am not fighting something or anticipating a potential trade, because I'm up against all these other traders that are probably doing the same thing. So for me, I'd rather, when it's a cheap locate, when there's tons of borrows, when it's easy to borrow, I'd rather let everybody else figure it out for me and then come in. And it's not always the case, but yes, that does play a role, as well as whether or not the price of borrows. Okay, how many people are going to look at the price and say, screw it? Or how fast was it gone? How fast was the locate gone? Or how hard was it? And that does give me a little bit of confidence at times. But don't get the false sense of confidence. I have definitely heard stories. I've watched videos of people saying, I had a false sense of confidence because, the borrow cost was so high. So, yada, 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 nobody could borrow it, whatever. And then they stayed because that was their conviction, based off of that price. So price always matters. Volume always matters. Trend always matters. But yes, that plays a role. As far as me thinking about how crowded that trade is or may not be. So absolutely, but don't get over conviction because of that. I think the biggest takeaway is how easy to borrow it is. And if it's got outlier volume, outlier range, you probably want to take a step back and let everybody else, kind of figure it out for you and then come in. And I'll give you an example. I forget the exact ticker. I don't remember if it was XELA or something else, but there was a day where all the prices of names were super, super high. And then there was this one that wasn't doing too much. It was up enough to be a potential short, but it was the cheapest borrow. So I felt like everybody was like, screw these ones. This one's cheap. I'm going for that one. And it ended up squeezing. It ended up being the squeezer. I think it was BSQR now that I think about it. So there's always that you got to go back and forth, and the common theme that you have to focus on is the trend, and if you're on the front side of the move, key levels, failed follow through momentum, line in the sand, all those things come into play for conviction for me, but not on the front side. All right. I always hear support and resistance, and I see the value seeing those levels, but I struggle knowing what key levels are. How can I see support and resistance? Thanks. Scan is always fire, and I always enjoy it watching it, even though I don't make trades every week. So support and resistance is just generally looking left and seeing where the prior support was and where the prior resistance was, right? So where did it have trouble with before? Where did it have, was it contained before? And, looking left can get you those congestion areas. Somebody had replied and used the word congestion. I like that word. So, where does it get congested on the support side? Where does it get congested on, the kind of the top? And there's that channel. So typically when I get higher conviction levels, it's when it's outside either of those channels, right? When it's outside the daily support or resistance. And that's when we start to get those outlier moves and those opportunities that we can take advantage of. So that's the first thing. Number two, as far as key levels, intraday, I want to watch where there's almost like a magnet. Where is there, this volume that's going off where it seems like there's a lot going on right there. And, you can start to watch it and watch it and watch it, and you'll see that, maybe somebody's getting out of a position slowly and it keeps on peaking out at this level. And so that becomes a key level. Same thing when it flushes down. It might not be the daily chart resistance or the support, but intraday, it should have pulled back there. It should have died. And each time it dips under it, kind of comes back up. Dips under it, comes back up. Those are the key levels that I focus on, because I don't want to be anticipating that break anymore, because everybody is, right? And it's for some reason it keeps on coming back up. So I want to just wait, let them exhaust out, because like we talked about last week, sometimes they pull that goalie, right? So keeps on peaking out, peaking out, peaking out. Oh, you're going to take the offer, ramps up, you stop out, you freak out, comes right back down. You were right all along. So that's how I use the key levels, and I always post them in the room. I get a lot of great feedback. We talk about it in the Traders Lounge, and it's been a really big aha moment for a lot of traders by just kind of developing, where that interest is and where that sentiment would shift from, the dip buyers to pop sellers. And I really think that if you think about it in that regard, when you're trading, where does this shift? Where does the momentum shift? Like XELA this week, it was 370s, 350s being key levels. And at what point do all these traders that are buying dips say, ugh, maybe this is done. Maybe I should start to sell pops. That's when I want to be fading it, not before. The only way that I would trade it before is into parabolic moves, which happens to be an edge of mine, but could be a disaster for somebody else. So only trade parabolic moves if it's something that you're familiar with. I would love to hear your thoughts on what time frames to look at on the chart intraday and why. I used to use the 3 minute, but now solely the 1 minute. I like to use 1 minute plus daily to get a full kind of picture. I can look at a 1 minute and kind of understand the bigger picture, the 5 minute, the 15, 60, what's going on. If you can't do that, it might be more beneficial for you to look at something with a longer time frame. Sometimes people make a lot of decisions based off of a 1 minute and it's too short of a time frame. That's probably the negative feedback from those that use 1 minute. So if you can't kind of see that, as you're trading, then maybe use a bigger picture. But for me, what I do and what I like to do, I am still taking macro style trades on, even though it's a relatively micro level, 1 minute chart. So that said, I miss a lot of bigger picture trades like that AMC huge breakdown. It would have been great to swing that. Same deal with CLF, X, and AAL, and NCLH, and CCL, and the airlines, the cruises, everything. Huge multi-week, month breakdowns, and I would have liked to participate in them a little bit better, which leads me to the next one that somebody was asking about, the travel sector. That was to remind me to talk about it a little bit. But yeah, hopefully it continues to unwind, but there's going to be that day when it rebounds. And, it might have that fake rebound where it ramps and then it starts to sell off again. But I do want to start to focus, because the day that these rebound, NEO rebounds, everything rebounds, it's going to be great. We've seen it before. FCEL, NEO, PLTR, plug. You saw this when it unwound last time, and there was a huge save. So in my opinion, there will be a day or two of amazing trades, but the key is not to be too soon. It's so easy to add, and it rebounds, and you add, and it keeps on going down. That's what's happening with SPCE right now. A lot of people are bagged. We need to have a huge flush, and then we might have that rebound. All right, let's get into the next section of Scan, and then we'll see you guys all on Monday. All right, guys, so for the second part of Scan, this is typically where I go over what I am prepared for the week ahead. So first and foremost, I'm not a financial advisor. This is for educational and informational purposes only. They're not buy or sell recommendations. The goal here is for you to be able to see how I prepare, how I'm getting ready for the week ahead. And hopefully it helps you prepare your own plans for either these particular names or other names that fit your style. So keep that in mind, and if you're not okay with that, shut the video off. If you're okay with it, then let's go. First and foremost, SPCE. I kind of put this in the same basket as NEO and FCL and Plug and AAL. Just everything that has nothing to do with each other, but they all have the same charts, right? PLTR, same deal. All these names that just were like straight up over the last couple months. If you remember, they were all straight down. And then we had that exhaustion day, that capitulation day, and then the rally, right? They all flushed off the open and then straight up. And from that point forward, steady squeeze. I think that's coming again. And we've been kind of prepared for it. If you've been paying attention to the Staying Familiar, we've been watching and potentially trading some of these. The NEOs, the SPCEs was really the standout SPCE. Like I had tweeted on the ATM, I felt like that was super negative that they weren't able to get $1 billion offer off, and they went to the ATM. They're just going to sell paper down. And at this point, longs are stuck. Everybody bought that dip. Everybody banked again. Now we've got this AMC situation where that's unwinding, GME's unwinding. The whole thing is starting to come apart. And, I'm not being negative. I just want opportunity. I don't want these things to fall apart, right? I want AMC traders. When it's up, I feel like the excitement's back in the market. When they're down, I feel like people are like, we'll wait on the buy button. And so we'll see what happens, but I think we're going to have a very similar capitulation style opportunity in the next 2 weeks. And whether that's this week, next week, or after that, we'll find out. But, for me, I want to be able to take advantage of it. I want to be prepared for it. And, we were prepared last time. If you guys remember the plug and the FCEL and the NEO off those lows, we had that flush off the open and then it just straight up. So lower the better, but when it reverses, don't step in front. Don't underestimate. A bear market rally is the term. Obviously, I know by definition we're not in a bear market, but same point. When things reverse, don't underestimate how far they can actually rebound, because a lot of times they reverse, trap, squeeze again, and then unwind. And I think that's also what happened over the last couple months. So SPCE, I think this is still super heavy. I think longs are super trapped. If the market rebounds and all these things rebound, this is going to go back up. But if things stay in kind of steady grind chop mode, I feel like pop still 30 50s, 31 blow off, potential unwinds. It can still come in. So that's what I want to be prepared for until we get that capitulation day where maybe it goes to 28, 27, flushes out and rallies back 30, 32, something like that. Be cautious trying to find the bottom on something like this. Let's see. TQQQ. Fantastic opportunities. Very friendly trader. Fail off the VWAP level here, you can see, and complete unwind. So been prepared for that. Got short on Friday off the open. And as you guys know, I took off. So, I'm not going to sit here and say that I got the whole thing. I didn't. I went to cash and moved on. But the timing, the preparation, the opportunity, we knew it was coming. And that's all by staying familiar and watching these charts. Sometimes I put a lot of charts on here without commentary, but it's because I go back and review the scan and see which ones are setting up and which ones are nearing that opportunity. And that's when I want to strike. So TQQQ, we could reset all the way back to 120s, 115s, right? There could be a huge opportunity. This has been straight up. So higher the better. You got to watch it with the market. Failed follow through. I'm excited about it. AMC, complete unwind again. I shorted this one off the open, covered, reshort, left it, and took off for the rest of Friday. I missed a nice unwind. It would have been nice, for sure. But, a lot of people are now on the wrong side of this trade. A lot of people are down 50%, right? Because they didn't want to miss the next GME. $60 when it could go to 180. Could go to $100,000 per share, I read on Twitter. But, the reality is coming. And the reality is here. And, you can see that each and every single candle has popped and sold off. Pop and sold off. So don't underestimate how far this can unwind. A lot of people are going to need to learn how to read a balance sheet soon. But we're going to have opportunities. And as you saw, this candle, and every single candle actually, the flushes like this right here and this one, the capitulation, the gap down flushes are beautiful rebounds. And that's what I'm looking to trade on SPCE and NEO and FCEL and plug and all those types. AMC is a great chart to review to see how it reacts on those gap downs and those rallies. That's where the edge is for me, the type of trader that I am, and that's what I want to prepare for. So AMC, again, all three of these are really, let's see what happens on Monday. These are going to be my main focus because I know there's going to be opportunity there. But higher the better, potential unwind continues, and otherwise, we'll see what happens. And I don't have a bias any one direction. I just know that these are going to have range, and these are going to be my focus. We're in a market right now where it's less about individual selection and more about where is the opportunity at hand, and taking advantage of that action, because these types of trades, for me, the liquidity is amazing, and I can take on whatever size I feel comfortable with obviously within reason, within risk parameters, but that's what I look for personally. So being able to put the most amount of money to work with the least amount of risk. XELA, beautiful. Unwinds, continues to gap up and unwind. This was a huge short squeeze. So they had a huge ATM, which turned into a fantastic trade, because what happened is very similar to what is now MMAT, which was I forget what the ticker was. But they had an ATM as well. It was a no-brainer, complete unwind, short it down because it's trash, and then all of a sudden there was more demand than supply. A lot of the supply was actual shorts, and then as it starts to go, shorts have to cover, and that's exactly what, in my opinion, happened on XELA. They put out the ATM, everybody hammered it. They put out another ATM. Well, they finished one ATM, and then they put out another ATM. And I think everybody was just a little aggressive on the short side, squeezed everybody out. Now everybody has been a dip buyer, and now in my eyes, they're on the wrong side. So 370s has been that key level, 370, 350s. It's been a fantastic, clean trader in the room. Higher the better. 350s, we're probably going to melt back down to 2. So I'd be looking for opportunities off all pops. Be aware that, like Friday, you don't need to get the top. You don't need to find the top. Let it do its thing, and then come. Then be part of it. Nice fail at VWAP, continues to unwind. So I think we're going to continue to have a lot of that. NEO is pretty set up for a nice failed follow through on the daily. I still think that we can continue to unwind. Again, one day in the market can change that. If we're up 500 points tomorrow, this will be up $2, $3. So, just because I have a bias to the short side, that's if the market continues to act in the manner that it has. If things start to rally, then obviously this one will too. CLDX has been heavy, and I forget what they priced at. I think it was 42, if I remember correctly. But it broke under that level. I should probably check. Yeah, 42. So it broke under the pricing, and it's been heavy since. So be cautious of the snapback, but higher the better, and I do think that this could actually catch a few off guard and potentially, unwind towards 35, 37, 35. But when it reverses, be cautious. Don't step in front of it, because a lot of these will end up, rallying back hard. BTU, nice opportunity. Missed this one, great breakout, and then the market kind of took a dump, so this thing came with it. So I'd be looking for pops 950, and then come back towards this level, ideally. So I'd be looking 950 right into this VWAP level, ideally. Comes back, maybe goes red on the day, and eventually starts to find its way back to 7 or 8. Looking at the chart support, you can see that it's got a little bit of support in this 8 range, and then it kind of opens up into the 7 range. X and CLF. Great chart breakdowns, thinking big picture macro here. They look a lot like AAL, and they look a lot like, pretty much all of them. But CCL too, they almost look like the travel sector before the next leg down, right? So you had nice breakout, comes in, finds some support here on the daily, and then completely unwinds. So I think that's kind of where we're testing right now. So the point here is, if we start to have some heaviness on the daily and it breaks under that major support, then it's very possible we have that next stage of unwind. So be aware of that, be cautious of that. Same deal with NCLH and CCL. NCLH and CCL, at this point, yeah, they've been fading for quite some time, and I do think that things can remain heavy. People look at the chart and they're like, oh, it's almost back to where it came from, but it's not even the same stock. They've diluted it so much that it's just there's going to be a lot of paper to come out on all of these names that people don't even realize. So I am staying familiar with that one for the same type of situation as NEO and SPC and all that. So if we have a capitulation candle and CCL goes under 20, 19, 18s, I'm going to start to get interested for a potential big share bounce play. YVR, higher the better. This was fantastic. Another one that, no reason to go up, but, everybody wants to know what to chase. They want to be told what to chase, and they chase, and it works until it doesn't work. And obviously it stopped working. So higher the better, and probably go back to like 180, 150s in the next couple days. Don't get too biased, right? It's very easy to come in and say, this is going 150, 180s. I'm going to get in there, and then it goes, up 10, 20 cents. Test your patience. You get out, and then you missed it. So once it falls off people's radar, that's when the real nice trades come. Next couple, under continuation, FWP has been fantastic. So obviously, if you guys have been watching Sunday video scans, I posted or talked about this one around $7. And the thesis was they've got a court case September 6th, and sort of reminded me of UONE. So I mean, it almost is literally the same chart setup happening. Only even thinner float. And when UONE went, it went nuts. So really, it just depends on if it gets crazy volume, if people start to pick it up into that September event. The reason why I started in at 7 was just because I had this whole thesis on UONE and all the Juneteenth names. And I thought I was early, like a month and a half early, and I was waiting on them. They started to trend up, and I'm like, this is way too early. And I waited for dips. And I had big plans to go in size. And long story short, the trade just kept on going away from me. So it was a little frustrating that I was so prepared literally for a year, and I missed it. So I was like, you know what? If this pulls back a little bit more, that's fine. But I'm not going to miss this other trade that has this catalyst when it literally is a carbon copy of UONE. And I missed that opportunity. So either way, at this point, it's gone 7 to 11. Adjust risk along the way, as you guys know. I don't think I need to remind you guys all the time, but just like MOXC and PLVY, all these ones that, are just straight up. It's always good to adjust risk. But, we'll see what happens. If this does start to get volume, starts to break out, I mean, who knows what could happen. It could be one of those that goes, circuit to circuit. But either way, it's a lower volume type of play, so obviously you should be cautious with that. MOXC continues to go up, won't let shorts out. That one big day it flushed, and then all of a sudden it came all the way back. So still feel like shorts are caught. I'm still in there. Again, adjust risk along the way. If you are trading it, just that constant reminder. It's been a good one. But it helps you when things do not go to plan, right? At least you shave some off. Game, for example. Game was a home run trade from mid 9s to 14, almost a 50% play. But, if you didn't shave any off, I mean, it turned into a crap unwind after the news. It went from 14 to 8 7s, and it's been kind of selling off. So, again, when you nail a big move, 30, 40, 50%, if you're not shaving some off, then, make sure that you've got proper risk management, because when it does pull back, at least you've locked them in, and you can either let it wiggle or you just get out. APT came back, interesting to me. I positioned on Friday just a little bit just to kind of be there. It felt like one of those that probably should have pulled back, should have died, and it was kind of strong, so I stayed in there. As an MP, I started in there on dips, and in like the 110 range, 115 range, and then it just failed, so I bailed at like 110. Then I blinked and it was 120. So I put on a little bit, nothing of size, but nice breakout so far. Nothing I'm excited about unless it starts to get some serious volume and breakout. And last but not least, NEG. Nice bounce play. I'm thinking it was a fantastic trade off the open on Friday. I got long. And it shot up like crazy. But I ended up putting on a little bit just because it had some good support here intraday in the 29s, the mid 29s. But I was thinking that it might have maybe one more test of Friday highs. So that's it. That's what I'm prepared for. I've got a lot on staying familiar. For example, Wish, right? I've got Wish on there just because, if it has a capitulation day, I want to stay familiar with it. I want to be able to take advantage of a trade like that. I've got mRNA on there, which has been going straight up. It's 280s now, 290s. getting close to 300s. Do we get a 320 opportunity? I want to be prepared for it. I want to stay familiar. FCEL, SAVA, PLTR, you name it. All good names to see. Understand what type of market we're in. You don't need to find the top. You don't need to find the bottom. Meat of the move. And that's really it, guys. So I hope to see you guys in Vegas for Traders for a Cause. It's going to be a great event. It's every year just gets better and better and better. It was upsetting not to be able to do it, last year because of COVID, but we did the virtual events as well, which was nice. It cost us $500 and we were able to raise a lot of money. Obviously, Vegas cost us more to put on, but there's nothing better than meeting people in person. So I do hope to meet you guys there. Again, early bird tickets are on sale now. IU early bird. If you use that, Zach will send me your information and I will send you an IU shirt. And we'll do that until Tuesday. So I put that out for my members on Tuesday, I think, Tuesday or Wednesday. And I said I'd do it for a week. So that offer stands for the next couple days. And that's it. We'll see you in the room tomorrow. If you have any questions whatsoever, Zach at traders4acause.org for the event if you have questions, and he's also in the room. If you have any questions about IU, Cam at investorsunderground.com. So that's it. Catch you guys tomorrow. Have a good weekend.